Today on the CEO Barbecue, we're looking for gold in Quebec's Abitibi Greenstone Belt, together with Maple Gold Mines. For a bullet point summary of this and all other CEO interviews, please go to resourcetalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, Maple Gold is an advanced gold exploration company, and its flagship asset called Douay has a 2022 resource on it containing about 3 million ounces of gold, mostly in the inferred category at about a gram per ton average grade. Currently, though, they're drilling a 30,000 meter phase 2 drill program after closing a $16 million financing recently, in an effort to update and hopefully grow that resource, all of which will, of course, be part of the conversation later on. Now, I'm not doing a full company overview here, though, because Kieran has been on the barbecue multiple times, and we already did a deep dive on Maple Gold probably about a year ago at this point. So I'm going to list that video in the description of this one. If you haven't watched that yet, please do go back to that one, because that's where we did a deep dive on the project, as well as the infamous smell test. We talked about the insider alignment and background incentives and whatnot, as well as the risks and everything else that comes with the exploration business. Just briefly on the numbers and some of the details here, Maple Gold is listed as MGM on the TSX Ventures Exchange, where the average 3-month volume has been about 115,000 shares. With a market cap of just under $158 million and 62.4 million shares outstanding, today this is a $2.53 stock with a 52-week high of $2.87 and a 52-week low of 50 cents. The 50 and the 200-day moving averages here are at respectively $2.20 and $8.37, which means it's both in the short term and a long term upward trend. So it's trading above that 200 DMA and the 50 DMA. Again, for the rest of the details, though, go and watch that previous interview, because it is finally time for me to shut up. And Kieran, I'll give you the word here. But first of all, thank you for sitting down with me today.
Thanks for having me again. Great to connect with you. And it's been a while since we caught up. Lots of new and exciting developments at Maple Gold. So excited to get into it with you today.
It has, and I am looking forward to getting an update on what's going on, because whatever it is that's going on, the market seems to be liking it. Your stock price more than doubled since last time we spoke. So talk to me about that. What have you done? How did you make the stock price go up?
Well, as you know, and investors should know, we don't manage the share price, right? We focus on consistent execution. Certainly, that's been a theme since I took over the company back in 2023. As I'm sure investors would note, looking at the chart, if you had invested in the company all along that period where, we were really resetting, but we were resetting fundamentally, right? We were fixing the geology, fixing the team, fixing the joint venture, attracting the right partners to the company. We don't manage the share price. We don't manage the gold price. Those are things that are out of our control. But since August, if you had invested, around the time that we attracted Michael Gentili, we had a further investment from Agnico Eagle. We've raised capital. I think now we're up to almost $30 million worth of capital raised, and 30 million on the balance sheet, but with some very strong institutional, strategic, Agnico backing as well. And that's really the recognition of, what we've accomplished. And it's a bit of the reset of where our valuation was when I first joined the company back in 2021. So certainly on an absolute basis, the stock is up since August, almost 270%. The fear, of course, out there is, well, the stock's gone up, it's got to go down, right? And what we've kind of showed is, we're starting to deliver large drilling programs on a very prospective project in Quebec. You're seeing M&A and, strategic investments by the majors. They're starting to report earnings. You're seeing consistent highs, obviously, in the gold price, although it's been a bit choppy. I think we've been very, very smart, very opportunistic, and certainly looking into getting into all these elements. But I think we've just kind of looked at it's collective effort. It's a great team effort. The team is well structured. We continue to be disciplined with our capital execution, and I think from now we can start talking. Really, we've got 2 years of funded exploration, development catalysts. G&A fully funded through the end of 2027. So, we can get into the major catalysts that we expect to deliver, which is going to start happening in the very near term.
Well, to the point that you make there, I mean, the stock price gone up. It has to go down. I think that is a simplistic approach, but what I was thinking about is like it is getting up there in value. I mean, you're coming close to 200 million market cap. Do you feel like it's getting overvalued here?
Yeah, it's an interesting conversation to have, right? Because no junior CEO that's worth their weight is ever coming onto a presentation and saying that they think they're overvalued, right?
That's
They're
right.
all undervalued. They all have lots of room to run. I like to focus on the fundamentals, right? The fundamentals are, I'm not a chartist, so I don't look at these cup and handle and, those kinds of things. It's beyond me, right? As I said, I focus on the fundamentals, but I also do, I come from the sort of capital markets, investment banking world where, relative value is really important, right? If you look at the subset of companies that are in Canada that have multi-million ounce projects with infrastructure, it's kind of a handful of companies. And you look at what those companies have done on a relative basis to what Maple has done. We have a peer group that's trading on average at around $55 per ounce US on an EV to resource basis. Maple, despite the fact that it's approaching 200 million market cap, remember, we have 100% control of a 3 million ounce resource, right? And that resource is actually out of date because it was done in 2022 at 1800. It's a high quality resource, but we expect it to grow. Um, and so our valuation today is 30 to $33 US per ounce. So it still trades at a discount to the peer group. I did a little bit of analysis here as well, just to look at like what would the implied share price be, assuming no resource growth, assuming you just have the 3 million ounces, if you just re-rated to the $55 US per ounce on the current resource base. I mean, the implied share price is $3.88, right? If you use, for example, some of the precedent, I think transaction multiples are oftentimes a lot better yardsticks than, trading multiples, which obviously fluctuate. So you look at what price companies are getting taken out at, or what price are, larger companies, bigger producing mining companies investing in junior companies at, what's the implied valuation? Those transaction ranges, if you look at the, Fresnillo's acquisition of Probe, right? A Quebec asset, multi-million ounce, very, it's a little bit bigger than what we are right now, but that's certainly aspirational for us. That was a $780 million dollar deal, but that was roughly 70, $80 per ounce US, right? You look at Northern Superior's acquisition by IAMGOLD, right? Another Gentilly company. Gentilly is a big strategic investor in Maple. That's around 60, $70 per ounce. And it's actually, increased because they took shares and IAMGOLD is re-rated. And then you look at, some other peers. AngloGold just made some very interesting investments into Gold X2, into Thesis. So they're putting some money to work as well. And if you look at that average sort of $80 per ounce, transaction multiple, the implied share price on the current resource would be $5.43 Canadian, right? So if you ask me, do I think it's undervalued? I'll just go back and say, of course it's undervalued, right? But I can tell you that the reason why it's undervalued, not only can I give you those numbers to kind of support what we think is a reasonable near-term target for our re-rating, there are historical reasons why I think Maple is undervalued relative to the peer group, right? The
Mhm.
company had failed there's legacy discount from, sort of hair on the name from previous failure to execute. It's an outdated resource. You had the optionality that we have with not only the resource update, but the exploration upside, et cetera. I think we're undercredited there. And I think really people haven't quite got, although the majors and others are certainly getting it. I think the jurisdiction, and the buildability of a project like this is not yet priced in, right? So I think, juniors have traded at historical discounts. The seniors are starting to report their balance sheets continue to be stronger. Their cash positions are incredible, just given the margins that they're creating. So, we just keep to our knitting, and I think we'll be able to claw back value here very rapidly.
I do want to know more about that, but people listening should also want to know more about Tara Hutton, who doesn't only make the invisible investable, but they've made this video free of YouTube ads by sponsoring it. Tara Hutton is built for the people who are tired of going through boring PowerPoint decks and geological jargon when they're analyzing mining companies. It's a digital platform where the data, the story, and the context sit together so mining investors can use visuals to understand the why without needing a geology degree or a week off work. And if you're on the company side, it's a great way to present your project like a serious operator with everything investors keep asking for in one place. Contact them at terrahutton.io. With what happened with Probe and the Mexican entry to the district, if you will, do you see that as a risk, and that in combination with the valuation? I mean, being undervalued in a bull market could mean being bought out too soon. Is that maybe the risk?
It's a reasonable question to ask because and part of the job here, while we manage a project, we're managing people. As we said, we don't manage share price or gold prices, making sure that there's appropriate, what do we say, deal tension, right? That you're not just putting all your eggs in one basket and setting yourself up and the company setting itself up to, be what do they call it? It's a take under bid, right? If somebody that's taking you over is actually taking you under because you're undervalued. So in our case, we have a number of things that are extreme positives for us to make sure that that doesn't happen, right? Number one, we have Agnico, right? And one of the things that I think is pretty clear about Agnico is I think they're the most sophisticated investor in the mining space. They have to be by necessity. They invested in our last financing. They stated the reasons for that in their press release, early morning report. Amar is speaking to, it's a different tone a little bit. Like they're obviously continuing to perform, but they're also looking at, opening things up for potential M&A, right? In a recent interview that I read on the 13th in mining.com. And what is he talking about? And what most of the majors are also talking about is, exploration assets and exploration upside and scale. Those are the things that matter to majors. Now, if we didn't have Agnico, let's say, and we were trading where we are at sub 200 million market cap on those valuation, sort of $30 or $33 an ounce, EV per ounce, anyone, Anglo, Goldfields, Kinross, et cetera, could look at that and say, you know what, we can put a 40% premium on it. We can probably do an all cash deal. And similar to, Fresnillo with Probe, it's their first acquisition in Canada. It's hard for boards of junior companies looking at our fiduciary duty, which we have a duty to shareholders, right, to maximize value for the shareholders. It is hard to say to any shareholder and to say to ourselves, look ourselves in the mirror and say, if somebody's willing to pay a premium in cash today to our current value, it is almost impossible to say no to that, right? What is interesting here is that you have Agnico as the largest shareholder of the company that continues to support and write checks. That's big validation, obviously, for what we've done to turn the company around. But we're also getting validation externally from, a coterie of name brand leading institutional investors, right? Remember the original structure of our joint venture. It was Agnico and Maple sort of funding 50-50 on these big projects and aspiring to do large company style exploration programs. Mm-hmm. But through all the good work that we've done, we've been able to actually set the company up so that we can now attract the kinds of institutional investment dollars and the right types of long-term focused institutional investors that gives us right now a 2-year runway, right? So we're not on our knees hoping that we get taken out. We're actually looking to deploy the $36 million of cash that we have to do those big company exploration programs and really start getting after, the kind of district scale exploration potential that we believe we have at Douay and Joutel. Having Agnico as your largest shareholder, one of the benefits of that is that I think it prevents, it's a bit of a positioning that, keeps somebody from just lobbing in an opportunistic bid and going over the top, right? Mm-hmm. We saw with the Probe Fresnillo deal, Eldorado had a 12% interest in Probe. Fresnillo came with a bid that they thought was fair. Eldorado believed that it was fair. They tendered their shares to the acquisition. So you have a large cap partner who's your largest shareholder, but but they're also very sophisticated. They also are doing good work. They've done their due diligence. They've got lots of cash. They've got lots of resources, et cetera. So I don't think any other suitor can come in and just opportunistically say, "Oh, we're gonna sort of lob in a stink bid, and try to take this thing out too quickly." The other thing, which I think is a real plus for the company right now, is we have a very well constituted board. We have a skill set on the board. My background on the investment banking side, lots of more of an M&A, large cap M&A, capital raising sort of background. So, I've advised on lots of transactions. We've put a lot of good deals together, even within Maple, including, the restructure, the joint venture, the financings that we do. There's always thought that goes into all of that. But since we've last talked, we've added Dustin Isaacs as our chairperson. Dustin is a lawyer by training. He's based in Montreal. He's fluent in French and English. And he was chief legal counsel for Turquoise Hill Resources. If you recall, or your audience recalls, Turquoise Hill was one of the most complicated M&A transactions in Canadian history. It was ultimately taken out by Rio Tinto at a valuation of roughly 4.3 billion. But when we think about being a potential target of, M&A, we'd like to see ourselves have the ability to not only, we have the balance sheet to support good exploration programs that we think we can drive shareholder value with. We've got a great supportive partner who's there as a large shareholder on the registry. And we do have a board that knows how to navigate. Dustin is obviously a key person, key recent addition, but Chris Adams, who I worked with for years at Macquarie. You look at Mark Legault, obviously his background in the corporate world with Nika for 35 years. We have a well constituted group to make sure that we are surfacing value for the shareholders and not just tendering to the first people that come through the door.
How's your French? Is it getting any better?
Oui, je parle français un peu, but it's easier for me to understand French, and obviously we spend a lot of time. I'm heading to site on Tuesday next week before the PDAC. We've got a lot of drilling underway. We've got some exciting new additions to the technical team as well. Everything has to keep pace, right? We've got bigger capital raises, better larger sort of dealers starting to lead our financings, growing research coverage, a properly constituted board. We have to keep pace. And always it's about building a company that's not just, if you think about a fulcrum, right? If you end up with lots of cash, but you don't have the people to actually execute, the thing topples, right? If you have, all the great things that you have with interest from investors, you can see a lot of these companies that, their share prices run up dramatically. I prefer the slow, steady march upward, right? I like to see the stock, especially with news, lots of news pending, technical news pending for the company. I don't expect this thing. It's nice that it's doubled since the last time you and I talked, but it's doubled on the back of awareness. It's doubled on the back of, recapturing value. We always had a great project in ounces, and those ounces were incredibly undervalued. I think Mike Gentili certainly talked to that and as one of the rationales for his investment back in August. But I like where we are today, just given that everything seems to have run, but Maple still has quite a bit of value left on the table. And I think the goal for us is certainly not to double or triple, but to really deliver that kind of upside, that kind of alpha that the new investors that are coming in at a back end price of $2.45. I don't think that they're investing for a 20 or 30% return.
Well, you bring up an interesting point, Kieran, because I always like to know who my colleagues are and who my competitors are. So if I'm buying something, who's buying it with me? If I'm selling something, who's buying on the other end? So, and I know it's not always as easy to tell, but who's loading up here? I mean, in your own estimation, is it mostly new people, as you said, that are getting exposed to the story either through Michael Gentili or some of the conferences or whatever you're doing, or is it current shareholders increasing their position? What do you think?
Well, I can't say enough about Mike. He's been, it's somebody I've known for over 3 years. We were delighted that he saw the value, certainly in what we had rebuilt within Maple, became a meaningful shareholder, strategic advisor, and he and I have worked very closely together over the last couple of months. I mean, Mike is also, he's very diligent and has a strategy and a philosophy of, how companies that he wants to be a part of, how they should operate. I can tell you on these two financings that we've done since Mike came in, the rationale for those financings were, we don't necessarily need the money, right? The best time to be looking at raising capital is when you don't need it. And, somebody asked me at a presentation yesterday, did you just take it because it was there? That's also not our philosophy, right? It is nice, the idea, and certainly Mike speaks to this. Um, you, if you don't need the money, the best thing you can do is to drive people into the market, right, to buy the stock. The problem with, and the positive for us is that we've got a tight share count now, right? We also did a 10-to-1 rollback. Usually when those rollbacks occur, in the retail business, rollbacks are a dirty word, right? You
Yep.
never want to hear rollbacks because the stock's going to go right back to the pre-rollback price. But if you look at what we've done post-rollback in August, again, it's not just because of one or two factors. I think there's a tailwinds in the gold market certainly help. Uh, our marketing efforts, the people we've added, the interest from the institutions, obviously in progressively higher financing amounts and share prices that we've executed those at. But I think the biggest thing for us, going into this next period is we have ample balance sheet capital. We have a fantastic team. We've got all the right things that you would look for in terms of, jurisdiction, in terms of, big programs. I know we're going to get into some of these, 30,000 meter programs. It's going to grow based on the cash that we have. And, I think the real activity that's happening in the stock, there's certainly people. I was at an event with Mike in over Vancouver, as the investor icebreaker. We met lots of new investors that know Mike that hadn't heard the Maple story. Certainly that has an impact on people buying the stock. We've had on the financing, I'll give you an example. The financing we just completed, Canaccord led that deal. It was not upsized. We kept it tight. We stayed disciplined. But, it was one of the best, junior mining books I think that Canaccord has seen in 3 years, right? And when we say that, I mean, if you look at the top six shareholders, top six institutional investors on the life offering, there are some very big names in that wanted to invest a lot more than what they were allocated on the financing, right? That was an oversubscribed, almost 4 times oversubscribed deal. And we did not take additional money because we took the right amount that gets us through 2027 and major catalysts. And once they're positioned in the stock, we've got Franklin Templeton, some new investors, Ixios, CI, Intact, Libra, 9 Point. There's a coterie of some very high caliber, very sophisticated mining institutions that took down more than 90% of the book. And that was with substantial cutbacks, right? So there's when we deliver news into the market, the expectation is that now that they're seated, there can be some institutional buying. I think the existing shareholders, you saw Agnico participate for full pro rata on the financing. They wrote a $1.6 million check. We saw Mike Gentili participate for roughly $1 million. We saw Franklin Templeton maintain their pro rata. So you've got this nice mix of new institutional shareholders coming in that help to bring not only external validation, but as the company grows, I mean, these are the kinds of shareholders that you want if you're going to raise bigger money for development and other things down the road. And the great thing for us is you've got that nice mix of new institutions very attracted to what we're building, but also strong cornerstone investors and importantly, management and board. We had 100% participation from management and board without me beating the drum and saying, hey, you guys got to write checks. I think we had all of our board members and my executive management team coming to me and say, hey, can we put money in? Which is why we structured a small, a hard dollar private placement on the deal. So we're putting our money where our mouth is as well.
How much of the financing are insiders taking? What percentage?
On a percentage basis, I can't say, but I know the overall private placement that was all disclosed in the release that we put out earlier this week. I know I personally put in roughly 50,000. As I've said to you in the past, I'm not independently wealthy, but that's a big investment for me, right? That is especially considering that like I don't sell stock. And so, we try to make sure that, if I think it's valued, I was buying stock when it was, 45 cents, when it was 60 cents. I bought into the all the last financings that we've done since I've been CEO. I've participated in, and this one at $2.45. The strange thing is even when we had the deal out and it was announced before we closed it, investors could have gone into the market. This is the irrationality of the market. Investors could have actually bought stock at below the issue price and free trading paper, for several weeks. And that to me is, it represents opportunity, but, that's the way the market works, right? One man gathers what another man spills, right?
How many people in total participated in the financing? Because you said like 90% is taken up by what, the top five institutions or something like that, or maybe institutions and insiders would account for like 90% of the financing.
Oh, no, I think so. We structured it in, there were two elements. There was a brokered life offering, which was $12 million roughly on the front end. That was entirely institutionally subscribed. We did a concurrent private placement, non-brokered, and that was really to accommodate, our existing core shareholders of Mike and Agnico, and management and board participated in the private placement. Mike took down about let's see, we're talking back end versus front end. I think more than 75% of the private placement was taken by Mike and Agnico, and management and board and sort of insiders basically took the rest.
Right. Okay. Do you think you're going to raise again in 2026 though? I mean, you said you are fully financed till 27, but I mean, if it's opportunistic or something, or is it like a complete no?
It's a complete no. I mean, and here's the thing. I don't, if let's just say BlackRock or, some absolute name brand institution came out and said, we want to put $40 million into the company, something that the board's going to really have to consider. But the thing we always have to consider is the quality of the shareholder certainly matters. The valuation, as we said, is still, significantly undervalued. So do we want to take that much dilution now, or do we want to deliver the catalyst that we have coming up? And really, if we don't need the money, are there other ways instead of launching a financing? If we keep, certainly everybody wants to get in at the lowest price that they can. But for us, we when we think about raising capital, we raised, initially over this last, since August, we raised $5 million with no upsize at 60 cents. We announced $10 million at $1.20, which was a double. We upsized it to 13 because I saw the book and we knew we had some good investors in there, so we accommodated, but we left a lot of unfilled demand in that 120 back end sort of financing back in September, October. And then this financing, I came to, the new year, we did some marketing with Canaccord. They're getting behind the story in a big way. We met with institutions, Antonio, that we have never actually met with. That's also a sign, right? There are institutions that are in our book putting in large orders for this financing, and we didn't do marketing for financing. We did non-deal marketing in January in Toronto, and Canaccord's got a pretty big machine opening up some new names that haven't heard the Maple story before. And, not surprisingly, we tell the same story. I mean, I'm telling you the story, but this is how I describe the story when we talk to any investor or potential investor. And we saw significant interest. And so when we looked at the last financing, $2.45, we only gave the brokers, 12 million to play with and no upsize, right? There was some discipline imposed there. If you look at where we are today, you've got our cap table. Our corporate presentation is totally up to date as of yesterday. It's $36 million, right? And you look at what that gives us. We've also got, by the way, deep in the money warrants with a strike price of 88 cents on average. Some of those warrants have an accelerator at if the stock trades above $2.50 over 20 days. The 85-cent warrants that were issued in August, those all get accelerated, right? And most of those are all long-term holders that participated in that financing. Agnico, Mike Gentili, myself, and members of our insider team. And so, with that kind of cash balance, it would have to be a spectacular investor, a spectacular offer, and probably a significantly higher share price for us to consider it. I can tell you this: we don't need it. Right. And so, we don't say to investors ever that we will never consider it, because that's obviously not, in keeping with our fiduciary duty to make sure that we're maximizing value. But it always, you can look at the money being there. And I know the old adage of, when the money's there, take it. As Pierre Lassonde liked to say when he was at, with Franco was, when they passed the cookie plate, take two. right? And Franco did very well by their shareholders, raising money effectively when their share price doubled. I know most of the junior shareholders that follow us, retail investors in particular, the two dirty words in the mining industry for junior companies is rollback and dilution, right? And so we do think about things, and some of my KPIs even for this year, we think about things growing value on per share metrics, right? Growing ounces per share, growing value per share. And if you're thinking about things on a per share basis, then the absolute number of ounces that you deliver, the quality of those ounces is important, but the fact that you're able to do it while minimizing your share count and actually growing the share price, right, as opposing to growing the market cap of the company through dilutive equity issuances, that's how we think, right? So we're set. And I'll go back to what I said. I don't expect or be able or need to raise any money in 2026. 2027, we'll see what happens. But 36 million is more than adequate for us to not only execute the programs we have underway, but to substantially ramp them up, right, over the next 2 years.
Mhm. All right, Kieran, I know as a finance guy, you're going to be disappointed to hear this, but let's talk rocks and not money anymore. I want to know about
Oh,
the.
I like talking rocks too. I mean, that's more of what I deal with on a day to day. I like to set the company up properly financially, but the rocks are really where things are getting interesting. So let's get into that.
How's everything going with the program? Where have you drilled so far? How much have you drilled so far?
Yeah, as people recall, we announced that we were commencing a 30,000 meter program late last year. We drilled for a few weeks heading into Christmas, shut down for a bit. We had 4 rigs, 2 rigs at Douay, 2 rigs at Joutel, 20,000 meters planned at Douay, 10,000 meters planned at Joutel. Drilling's going well. The team is functioning extremely well. We're operating efficient. It's been a cold winter. That's also been helpful in Quebec. Most of my friends in Ontario and Quebec would lament the fact that it's been so cold and snowy, but that's perfect for us because the frozen ground, the cold conditions actually helps us when it comes to being able to access all the portions of the deposit that we want to get into. I will say this, though, that while our drilling historically has been relatively seasonal, we've done some very smart things. We've permitted an all-season road, and we're constructing that as we speak at Douay, so that will enable us to be able to drill and deliver more year-round drilling results from the Douay project. Um, Joutel is higher and drier. It's something we can drill effectively year-round. And look, the results from both, we weren't able to sort of put results out in the middle of, it took us 3 weeks, obviously, from announcement to closing of financing, but I expect, drilling results and catalysts to start very soon and to continue through the summer. I can tell you this, we don't talk about what we see in the core. We're not trying to foreshadow any of the results, but I can tell you that the team on the ground is doing a fantastic job. And I will be there next week with a very important new addition to our team, which we'll be releasing to the market next week, and as well as a couple of our directors and with Ian. It's really to make sure that we're reviewing all of the drilling, taking a look at the core. Are we seeing what we were looking at? What we were looking for. In terms of total meterage, I would say we're about a third of the way through, maybe a little bit more in terms of meterage. And so, I think we're on time. I think the market's certainly waiting to see, what we're going to be able to deliver out of the drill bit, and that's a key interest and focal point for us. But should start to see results coming in the next week or so, and then a steady stream going through the summer.
Those first results, which target are they going to be from?
Look, we started at Nika at Douay, following up on a number of plunge orientations. The success that we had in the phase 1 program from last year with hole 338, defining bulk tonnage underground style mineralization at Douay. We had obviously a big intercept over 2 grams with some higher grade, 3 grams over 56 meters, et cetera. That type of target is what we're looking at Nika. We also had a rig turning at Douay, sorry, excuse me, at 531, where we had success from the phase 1 program. But we're starting to think bigger. We're starting to look at, as we said in our phase 2, there's a slide on our corporate presentation which talks about the breakdown in terms of the vertical depth of phase one versus phase two targeting. So phase two, anything between 500 and 1,000 meters vertical is open. It's very sparsely drilled. We do have better controls on the mineralization. We're starting to test some cross plunges. You can see on that slide. These plunges are not just lines drawn on a map. I mean, they are, they're based on the observations that we have from core, structural observations, validating the model that we currently have. We've gone back and tested some areas in the Douay West portion of the deposit where there is, more of the indicated is there, but we're testing can that grow along a cross plunge. This cross plunge thesis is actually, it seems to be bearing some fruit, that there are some, intersecting plunges is where you tend to see grade concentration.
Hmm.
But I don't want to get too deep in the weeds. I mean, what we're starting to do now is we're also starting to expand our field of view, right? And look at, this Douay deposit is really 6 kilometers of 55 kilometers of strike length on the Casa Berardi fault that we control. So we had some great success with the final results from the summer program. It took a little bit longer to get some of those back, but in addition to having a Douay lookalike target, just to the east, 2 kilometers to the east of our easternmost extension of the currently defined Douay resource, we saw, pristine gold grains in some of the basal till sampling, right? So we'd seen, not only had we seen evidence of a potential Douay lookalike in our top of bedrock, which had, abundant fluorite and cyanite and, reasonable gold grades, especially considering our average gold grade at Douay is about a gram. We were getting 1 gram samples out of this top of bedrock 2 kilometers east on an undrilled, untested target. But we did also add to that some of this additional sonic results, right, that are giving us a better sense of where we can go regionally. Remember, we also staked some ground to the north of the Casa Berardi fault in the sediments. That sedimentary target has yet to be tested. So we're gearing up for additional exploration work outside of the Douay footprint. But really the focal points and what's going to be coming first for drilling results from Douay are going to be results from the resource area, but testing further down plunge. At Joutel, we're going to be, as we said, it's a maiden program for us at Joutel. We had done a previous program in 2022 at Eagle. But this, restructuring that we did on the joint venture gave us 100% control of this big past producing mine complex that is, the Joutel mine complex, which is a 3 mine complex, Eagle West, open pit, Eagle shaft, and Tellbell shaft. So the distribution of the meterage it remains as we've presented it on our presentation, but we've been testing there specifically, bigger step outs, right? There is some known mineralization in and around the existing workings. And this was high grade. This was a mine complex that produced 1.1 million ounces at 6.5 grams per ton by Agnico, between 1974 and 1993. When it shut down, it didn't shut down because there wasn't enough material to keep going. It's a function of, the fact that the gold price was sub $300. And they also had, what they viewed to be better projects to move on to, LaRonde, Goldex, et cetera. So when we have gone out with the thesis of what we're testing at Joutel, we look at it as a potential high grade restart opportunity,
Hmm.
right? If you think about, think about Radisson, right? Think about the O'Brien project. It's a historical underground high grade past producing mine. They're much more advanced than we are in terms of their drilling, and they've done a great job. Matt and the team have done an amazing job of getting value back, to where I think it's getting to be a very meaningful project. We think we have something similar at Joutel, and the first results from Joutel are designed to not just drill low-hanging fruit around existing workings, but to do some step outs to kind of show, if you hit and you intersect high-grade gold in those areas, you have these 2 shafts at Eagle. The shaft goes down to 900 meters. At Tellbell, the shaft goes down to around 1,200 meters, and you've got the existing workings around them. I think the replacement value, according to an industry expert that we talked to recently, of what is the replacement value of a hole in the ground, right? That goes down to 900 or 1,200 meters in today's dollars.
Hmm.
Those are about $100 million a piece, right? To
Yeah.
drill those kinds of shafts. If you find mineralization, and particularly high grade mineralization in and around those, it's not out of the realm of possibility to think about what could Joutel be, from a long-term perspective. Could it be blending material for, a combined mill complex that's producing both Douay and Joutel ore? Is it a standalone project, right? So those are the first results that I would expect to see are the initial tests on Joutel, and then the follow-up phase 2 program that we've been working on, following up on the success we had with phase 1 at Douay.
You mentioned efficiency. How's that been? Well, you talked a little bit about weather there, but also underground conditions. How many meters a shift are you getting? How's that going?
Yeah, no, it's efficient. We look for efficiencies throughout, the company, right? And so, some major breakthroughs in terms of getting the drilling costs from our $400 per meter under the joint venture, to $300 per meter on average, as part of our new approach, which was a substantial reduction. And that was all done via, we're working with some contractors that are helping us. We're not overbuilding the team. We have a right-sized team now that can be supported by some very, Quebec. It's one of the advantages of working in Quebec is there's some great geological contractors that can help with some of the, we do all the oversight, but we've got, groups that can help sort of, think about the moving parts we have. I'm excited to see it, at sort of full capacity. We have a 45-person camp at site. It's full, right? And we've got Spectra drilling, we've got Major drilling, we've got Laurentia exploration, we've got Expo Logic, we've got our team all working together. I mean, this is the harmony. When things are buzzing, this is good, right? You never want to go to a mining site and see quiet, because quiet means, we're not generating news flow, and we're not generating things that are actually materially advancing projects. So, efficiencies have been going well. I mean, I get weekly reports back from site. Ian and I are working very closely with Nick, our CFO, with the controllers, the staff that we have on site on the ground, Stéphane Tremblay, our site superintendent. So I think we're doing an excellent job. This is the rewarding part of having put the right people in positions to succeed. I really trust my team now that everybody comes at this from the standpoint of, this is shareholder money, right? If we can find more efficiency, it means more meters drilled, which creates more value for shareholders, right? So, that is probably the thing I'm most proud of with this whole reset, has just been the cultural shift of, we are here for shareholders, right? We are, certainly excited about the project. We feel the Maple Gold, the team that we have, the project that we have, the goal has always been to create the leading exploration development company, gold exploration development company in the Abitibi. And, we're getting dangerously close to being a real company. It's always an interesting path, is to make sure that the growth that you're trying to, foster and support is sustainable, right?
Mm-hmm.
And the sustainability, with that is not just the efficiencies on drilling and delivering great results to the market. It's also making sure that everyone comes home. I have an adage. I want everybody to come home with, 10 fingers and 10 toes, right? Safety is incredibly important, right? Mental health, I want people to be engaged, to be excited. If you're sharp, if you've got good acuity, you're going to make fewer mistakes. We've worked really closely with our partners, First Nations partners as well. Making sure that, we're behaving, like a good corporate citizen, and making sure that this is inclusive, because we have a real opportunity, right? These are the kinds of things you do when you really are trying to build a long-term outperformer. And this is a long-term project, right? This is something that, there aren't this kind of resource endowment and upside next to infrastructure in the heart of Quebec and Elephant Country doesn't come along very often. So,
Yeah. The $300 a meter, you said, is that a target, or is that what you're getting on this program so far?
It's a target. I mean, if we can get below that, that'd be great. And by the way, I should state that is not that is an all-in drilling cost, right? That is inclusive of direct drilling, but also,
Right.
the camp, the people, everything. So, that's our target. We obviously try to set our targets. It's a reasonable target based on our first drilling. You know, drilling and exploration is not unlike mining in that a lot of cases you have economies of scale, right? So you have fixed infrastructure and fixed costs of salaries and other things. The more meters you drill, the lower your fixed cost, right?
Mhm.
On a per meter basis. So I think our goal is, and we aspire to ramp up to, I had an interesting conversation. Ian was on with me. We were talking to an institutional investor just to give you a window into what's the secret sauce of coming up with some of these financing numbers and amounts. And Ian said at one point on a call, if Kieran gives me 100,000 meters of drilling, I think we'll crack this thing wide open, right?
Mm.
And if you think about it, at $300 per meter, 100,000 meters, that's roughly $30 million. Well, go take a look at what's on our balance sheet today.
Can you? I mean, do you want to go to 100,000 meters this program?
Look, I don't view this program as going to 100 meters, right? I think the target should be, over the next, we have to spend the majority of, the funds that we raised over the last, 6 months have been flow through funds, right? Because we don't need a lot. We've been efficient on on our overhead expenditure. So, that money needs to be spent. Some of that money needs to be spent by the end of 2026. Some of that money needs to be spent by the end of 2027. It's why we try to manage our flow through raises because even if the money's there, if you take all of it as flow through and then, gun to your head, you have to spend that money by a certain date. That may not be the most efficient way to spend the money, right? You want to spend it in the right way. You don't just want to just drill holes in the ground and take moonshots. The company got in trouble doing that in the past. So, uh, I think if you look at our current, spending obligations under what we've raised via flow through and you look at what our current drilling costs are, and you look at obviously that bigger picture statement that I just quoted, that's aspirational, right? That's something where we haven't come out and said the board's approved a 100,000 meter drill program. But I can tell you, going from, the JV, if you go back to the JV, that was Agnico spending on an earn in, 4 million in the first year, 4 million in the second year, 5 million in the third year, 5 million in the fourth year to get to 18 million. Our budget, our spending for last year at Eagle, excuse me, at Douay and Joutel, we spent about $10 million last year. This year we're going to spend 14. And next year, if you look at the balance of what's left on our flow through, I mean, I expect that number is going to be even higher. So I think you can back out pretty quickly that if we were to go after what are sort of big company exploration programs on a fertile and prospective land package, I mean, 50,000 meters a year is about right, right? I think it's the right size for us, and what would that be? That would be probably, we're 30,000 meters for this winter program. You put another 20,000 meters onto it to keep the drills turning. The other thing is, Antonio, as everybody knows, is that with the gold price going up, with additional capital availability in the sector, everybody's drilling, right? Everybody's drilling. The labs are way backed up. We're, frustratingly awaiting assay turnaround times that are, 35, 40 days at times.
Mhm.
And the competition for people, for rigs, all of that is real. And so, rather than cut rigs loose, I mean, one of the things in the back of my mind is, I'm saying, well, I don't necessarily want to cut rigs loose and then hope we can get the A drilling crews back, when we want to turn the lights back on again, right? We want to keep those rigs turning ideally year round, so we don't lose not only momentum, but we don't lose the kind of good drilling crews and the good contractors that we have working with us. So if you take 30,000 meters, you add another 20 to it this year. Not saying that's been approved yet, but that's sort of conceptual. That gets us to 50,000 for 2026. I mean, last year we drilled 12,
Mhm.
right? And so you're going from a 12,000 meter program to 50,000 meter programs each year. And, in parallel with that, obviously everybody wants to focus on the exploration, but, we have a major reset resource update that's forthcoming that should be out within the next, in a short while. And that is really going to be, it's not going to include any of the drilling. The cutoff for that resource, was after the winter program concluded in sort of the spring of 2025. So any of this 30,000 meters that we've currently we're underway on, any additional meterage that we have planned later this year and in 2027, the resource that we come out with is not going to include any of that drilling, right? So I think it's in a really good time for us to kind of talk to the market and say, look, here's the work that we've done to remodel the deposit. Here's the the impact of the 20 or 25,000 meters that we had drilled since 2022. Here's the impact of the gold price of different assumptions, et cetera, on what that resource looks like today. And then here's how we're building it, how we're growing it, right? You can see very clearly, these are what the new pit shapes look like. This is where we see underground potential. This is where the new drill plan is, where the targets are going to be. So people can really see, okay, I can see the drill pattern. I can see the open space. I can see what the vision is. That's where things start to get interesting, right?
Mhm.
Drilling off of an outdated resource, you're flying a little bit blind, right? Because you're not really sure, with that 2022 resource, anybody can kind of look at that and see, some of these pits may hold together, but some of them are very small. You can see, if you're trying to do a back of the envelope on, there's a bit of a rule of the thumb for open pits is, if you're more than 10 to 1 on strip ratio, uh, the likelihood of those actually going and working successfully is pretty low, right?
Mhm.
So our goal with all of this is, we want to have an updated resource that's a reset, but it's driven towards something that's more of a geo mine met model. It can give us something we can take to our engineering partners and do, mine sequencing, think about trade-offs between open pit underground. Think about process flow sheets, think about development scenarios that actually, drive material, re-rates and appreciation in our share price. So again, I think the size of the programs and the size of the project are very much linked. The other thing which is linked is, when you look at the investor base that we've cultivated and the registry that we've cultivated, it is a long-term focused shareholder base, right? So when we do these kinds of programs, when you have more money and you have the ability to really take some bigger step outs, your risk profile changes, right? Not every hole is going to be like the last program we did, inaugural program with the new team. We had 100% success rate, which is credit to the team, credit to the model, and what we're trying to build. But, risky, exploration is always risky, right? So, and if you're going to make new discoveries across this big land position, you've got to go after and test some of these, more farther afield, out of footprint type targets. When you're a junior company that's struggling, where failure is not an option, you don't typically get an opportunity to drill those targets, right? Because your market's going to look at it and say, if you return one hole that doesn't come back with gold in it, you're done, right? Or your ability to raise capital is severely limited, right?
Mhm.
And so I think for us right now, there was a focused, strategic imperative for us to make sure this 2 years of funding isn't just to kick our heels up and, wait and hope and pray we find more gold. It was to give the company a better profile, to be able to go and test the things that are actually going to really meaningfully drive the project, both from, you know, adding quality ounces to existing resources, but demonstrating the potential to make new discoveries across the land package.
Well, I still hope you're hoping and praying, though. That always helped me. That couldn't hurt, right? Um,
Oh yeah, well, listen, we have to listen to what the universe is telling us, and the other thing is, I said the things we don't control, like we don't control gold price, we don't control
hmm,
share price. We also really don't control what's in the ground, right?
yeah.
Our job is to find what's there and to have a thesis for why it's there. But if it's there, what is the value? If we talk about valuation, just for a second, going back to a previous conversation, I mean, what would the value of this be if it's another, cornerstone Quebec asset? We don't have the answer to that question today, but if it's another, Windfall or Malartic or Detour or something like that, right? What's the potential value in this gold price environment? I'd say it's significant, right?
Mhm.
But we don't know that right now. We don't know, and our job is to go out and answer that question both for
Right.
ourselves and for our shareholders.
If you were to increase to say 50, would that be pro rata or would it be because you're doing 12,000 meters at Nika, 6,000 at 531, 10,000 at Joutel, and then there's another 2,000, I suppose, that are left in the back that for step outs or other work. But would you, if you do 20 more, would that be pro rata or how do you think?
By zone, it's hard to say because we're taking a look at the current 20,000 meters, which we're about halfway through to deter. It's always going to be the highest and best use of capital, right? If we're hitting where we think we're hitting and we need to expand it and it's open and it's going to add material ounces and it's going to, it's going to deliver value, then yeah, it'd be pro rata. Obviously, we've spent a higher degree of the current funding on Nika because Nika, we saw something that looked like, the start of a potential bulk tonnage, underground style target. We've seen that movie before with Malartic, with Detour. You have these 1 gram open pitable type resources, but then you show what the potential is, what the corridors of mineralization extending to depth. They don't need to be, you know, always the highest grade, right? If you have enough, grades and that type of intercept that we had shown in Nika, those 100-meter 2 gram intercepts are very meaningful, right? They're easier to mine. You don't have to go with selective underground mining. Your cost for development is a lot less, but you just have to find enough tonnage at those grades to support going underground.
Hmm.
But in terms of pro rata, where I think it is applicable is if you look at expanding programs. Look, the focus of the company, and certainly I know the interest of our large, strategic partner is really it's been on Douay. I think this current program, 30,000 meters, the ratio of drilling is roughly 2-to-1 between Douay and Joutel. I think that 2-to-1 ratio is probably correct as we continue to move forward with this next 30 million, 36 million that we have on our balance sheet. And then we'll need to evaluate, right? One of those projects is going to emerge, or both of them are going to emerge as potential, near-term development opportunities. Obviously, that's the work that's going on in parallel, that's going on behind the scenes. It's not just we're just drilling and exploring and hoping that, at some point 2 years from now, we're going to start the process of thinking about how these projects could become profitable economic mines. We don't start that process 2 years from now. Like we're starting to think about it yesterday. And so the groups that we're working with, the drill planning, part of making sure we've got this updated resource, we've got the engineers working on mine sequencing and all these other things is, if it helps us to, better geology, better technical work, helps us to better plan drill holes that, we can't guarantee success, but it increases our probability of having higher hit rates and meaningful drill results.
Hmm.
If we deliver drilling that actually those ounces that we discover, if they add to a better economic sort of mine plan, that's the goal, right? Because at the end of the day, we've got a mining partner. We've got, large mining people on our board and within our management team. The goal is not drill 100,000 meters so we can keep being a science project and, just drill 50 or 100,000 meters forever. I think the goal is to try to make sure we can define a critical mass of gold ounces, and then really try to drive development around that responsibly, right? And in a disciplined way.
Hmm. And Nika, how deep are you looking to go? How deep would be too deep to go, actually?
Well, I mean, we saw with our deep drill program that we did in 2023 that there is a bigger hydrothermal system here at depth all the way down to 1,500, 1,800, meters, right? And those were drill holes that didn't really have, what I would say the most robust targeting. They were really testing the thesis that, this gold that's sitting at surface, that there is some corridor, right? There is something that's bringing it. So, but again, what we've done with our approach is it's been systematic, right? It's been, we're gonna understand controls and mineralization. There are a lot of gaps in the, even though it's a 3 million ounce resource today, there are gaps in the upper 500 meters where that resource sits. There are gaps in the drilling between 100 to 200 meters. When we do some of those holes, those aren't necessarily infill holes, right? They're trying to just give us better controls on mineralization in the upper 500 meters so that we can then go with a model and test extensions along known, mineralization controls, right? These
Sure.
plunges, these arrows that we show on our maps. And so when we drill, one of two things is going to happen is we either see that that's continuing and that thesis is valid and we're able to, to refine the thesis, right, and get better, tighter controls and keep going. Because the more you go, the more depth, the greater the depth of drilling, the more expensive the hole, right?
Yeah. Yeah.
Um, And it isn't necessarily linear, right? And that's the interesting thing too, is it's not like you say, okay, $300 per meter if I drill a 500-meter hole or if I drill a 2,000-meter hole. It's not always going to be $300 per meter, right? Because, sometimes those holes, they deviate. You've got to use, as well. You've got to make sure that if you've got a specific target that the hole, the complexity of the hole as it gets deeper also increases, right?
Hmm.
And so you have to have real justification for why. As I said, and what we've shown in our presentation deck is that really we don't have a hard floor. If we see mineralization continuing, the last thing we want to do is to tell a geologist on site, if you see mineralization continuing when you get to 1,000 meters vertical depth, stop.
You
That
never
would
want to
be
stop in mineralization.
well, and that's the thing is we do see some of the holes when we went back and we looked at some of the historical logs. I mean, some of the holes that we've done, we talked about this before too. Well, how do we make our drilling more efficient? We saw holes, and you're going to see some of the results coming back from Nika, where those holes were testing shallow targets that were pitable. They didn't know this bulk tonnage underground potential really existed, and they didn't have the controls. So some of those holes actually stopped too short. So our team went back and looked at a few of these holes and said, well, can we extend those holes? Because the projection of that hole actually looks like it would extend into, one of these cross plunges, for example, right? And, so instead of having to drill that top, 300 or 400 meters again, we kind of re-entered a hole and then just, deepened it.
Hmm.
Um, but look, I think we really do look at that, broad framework of phase one, phase two. There's still some of the targets. I'll give you a great example at Nika. When we did the 338, which was a 300-meter step out from hole 282, when we looked up plunge into the pit, there were huge gaps in the drilling there, right? And so, there's probably going to be a few shallow holes there just to, again, it's not like we want to do only infill drilling and just, add ounces to something that's already pit constrained. But if you can increase the quality of those ounces and you can increase the potential grade in the Nika area, what do we look at? Like I have a slide on our deck that talks about how many ounces in total on the 2022 resource, how many ounces in total do we have between Douay West, Nika, and the Northwest Zone, right? Those three
Hmm.
westernmost sort of areas. There's almost 800,000 ounces there today. So when we think about, when I've mentioned this a couple of times, it's got to be grounded in some kind of reality. If we can, on an updated resource, get that over 1 million ounces, if we can add to that with good drilling, okay, yes, we're looking at the big, 5, 6, 7 million ounce potential of what the overall project could be. But if we've got a critical mass of, 1 million ounces plus in that western portion of the Douay resource, where
Yeah.
the overburden is thinner, where you see that iconic image of our head frame, some great videos we've shot since the last time I saw you. We were out at site with our
I saw.
team and with some analysts as well. That head frame's there because Orizon, back in the late 90s, Orizon they had intended to actually go and mine Douay West underground when the gold price was sub 300,
Hmm.
right? If we can get that area up over 1 million ounces, it's a very nice potential starter operation, and it's not de minimis, right? I mean, if you think about a typical, you're starting with 1 million ounces of, if we took that project out of Maple and out of the Douay project and we put it into a new junior company and said you've got 1 million ounce near surface at over a gram with infrastructure, go do a PEA and go do economics on it. I mean, that's a pretty nice starting point to be, right?
Hmm. Yeah.
So that's what I would say, when I think about pathways, it's always dual track, right? It is focused exploration, but it's always driven by the discipline development side, which again, it's a lot of words, not to get into word salad. Like you have to see those numbers, right? We have to see them internally first. We do have, at least visibility on the quality of our data, knowing that if we've got something that looks reasonable, it would take us probably from the time we said go on a PEA, we probably could be there within 6 months.
Hmm.
So, I mean, I think that the beauty of having the capital, the backers, the long-term partners, the team in place, the reset completed, better technical understanding, and a tailwind in the gold market is that, in the next 12 to 24 months, we're going to be able to answer some very, very significant questions about not only how big can this deposit get, but what is the buildability of this project, right?
How deep do you think it goes, though? Because that was the original question: is how deep do you want to drill Nika? How deep does it go?
Yeah, I don't know. I mean, to be honest, I don't know. I think if you look at the only thing we can look to is we see in deeper drill holes, we see anomalous gold and massive sulfide at, greater than, 1,500 meters depth, right? That tells us we also see in the geology, we're straddling the Casa Berardi fault. It's a deep structure. It's a first order structure in the Abitibi. It's got, known gold occurrences not only on our project, but, it's the same fault system that has Hecla's Casa Berardi mine, which was not Hecla's anymore. It was sold to Orezone very recently. Congratulations to them. That's an interesting. We've got new neighbors in the camp. There's a past producing mine to the east of us at Veza. So when you think about, we've got all this, lamprophore carbonatite in our core. We know we've got a deep system. We've got this big intrusive complex. We've got, a big near surface deposit. And we really only have, four or five drill holes, that have tested below 1,000 meters. I would say it's really too early to say how deep can it get, right? I can tell you that we set some clear boundaries around the drilling now because you don't want to be spending lots of money on, extremely deep drill holes without a real thesis and without a real reason for going there, right? And we have
What's the
lots of white space to fill in the 0 to 500 meter range at Douay, and then at 500 to 1,000 meter range at Douay. I think we can add material ounces up to 1,000 meters very easily. But the goal is not just to add a depth. I mean, the goal is to expand the footprint, is to go and test regional targets. So it's always a balance, right?
what is the thesis for what's going on at depth in terms of geometry? I mean, is it kind of moderate grade panels or discrete high grade shoots or both, or what are you looking for?
Look, I think that's an interesting question. I think there's clear structural control. We've demonstrated that. We went out to validate a new structural model. You see this sort of strike slip displacement on the Casa Berardi fault. You see a big intrusive, syenite intrusive, which is very rare in the Abitibi, that kind of emplaced along that weakness in the crust. Created a conduit for lots of hydrothermal fluids. These high grade areas on the distal portion of the deposit seem to be where these, theoretical sort of pressure shadows are, these dilation zones. So you've got graphitic shears in the 531 zone that correlates to high grade gold. That's something similar to what they have at Casa Berardi. I think what we're really looking for, though, I think the model is similar to what they have in Malartic, right? I mean, although the rocks are slightly different there, it's reverse of where we are, where we've got, a lithotectonic boundary, a major first order structure. We've got the Casa Berardi, they've got the Cadillac Larder Lake. On one side of the fault are, sediments. On the other side of the fault is, volcanics and volcaniclastics. In the case of Malartic, all the mineralization is in the sediments. In the case of Douay, all the mineralization is in the volcanics, right? And so there's a reason why, right? But you start thinking about what was the evolution of Malartic was, well, they had this 1 gram deposit sitting at or near surface, one of the largest open pit mines in Canada. And then they went and drilled some pretty, interesting, deeper targets that became, East Goldie, Odyssey. And if you think about some of the grades and tonnage, I mean, that's really all the transition of what they're mining there. It's moved entirely to underground. And it's bulk tonnage underground at circa, 2, 3, 4 grams, but they've got a lot of tonnage, right? And so for us, it's not looking at, I mean, a system this big. I think the likelihood that it was emplaced along a very high grade chute and then just mushroomed out when it got to surface, I think that's pretty low. I think it's probably more that there is this dispersed, larger system, multiple events of gold deposition. But probably there are corridors, right? There are probably corridors, whether they're structurally defined or, they're defined by, what do we call them? Geochemical buffers, right? When rocks and fluids of certain, composition hit, different types of rocks, then they tend to precipitate out minerals, right? And so if you've seen these units that we have, as we get better understanding of the stratigraphy of the the composition of the rocks at depth. I think the goal for us is to try to go after it. If you ask me what I would like to see, it doesn't really matter, right? Because what it is, what the rocks are, the rocks are what they are, right? And the mineralization is going to be what it is. But I think the goal is, as we've shown at Nika and we're showing at 531 and other areas, is that there are higher grade corridors and higher grade chutes that aren't necessarily like veins, right? One of the things that's interesting about our deposit versus even Casa Berardi is there's no quartz veins in the Douay system at all, right? It is gold associated primarily with fine grained pyrite, which gives us good metallurgy, right? We don't have a lot of arsenic. We don't have really much at all of arsenic there. So you've got a very clean deposit. It's got good recoveries using whole or leach, using gravity, flotation, cyanidation. We're probably going to need to do additional, some additional metallurgy. We'll probably need to do a bit of characterization of overburden. Like, you hear me, I'm kind of thinking like the answer to the question of like, what is this thing going to look like at depth? That's an interesting question to ask. But what is more interesting to us is if we're going to actually fund that type of exploration that's really going to be efficient in drilling deeper holes and more expensive holes, we first have to think about how we're actually going to get our valuation up, right? Because the cost of raising capital to do that, our goal should be to lower our cost of capital. And I can tell you that probably the quickest way for us to do that is to show a path on the ounces that we currently have.
Yeah. Yeah. What about 531? How'd you say that in French, actually? Cinq trois, probably, or 531. What's the potential role there in a
I think 31 is 31.
31? Oui. Yes. I mean, yeah.
31 and 5,
500?
531.
Yeah. Is it 531 or is it 531?
It's
531 sounds just
531. Yeah, it's
531
531.
sounds just so much more. It's just nicer.
It's
Um,
nicer. I agree.
you should rename it
Um,
in my sake.
yeah.
What
Uh,
is its potential role in a potential future mine plan? Like, is it a pit sweetener or a standalone domain or something else entirely? What is it?
Look, I think the both the two things that help to answer and frame that answer. One is 531 has high grade. You can see some of the intercepts that are there. 2021 we drilled 8.8 grams over 28 meters. We followed up in last year's program with a number of holes, including 5 grams over 13 meters, and there's high grade at 531, which is great. What the issue is at 531 is you've also got thicker overburden.
Hmm.
And so, the current resource from 2022 has 531 as a pit. Practically speaking, I don't necessarily see it as a pit. I do see it as, starting to build some critical mass to be a very attractive bulk tonnage underground zone.
Hmm.
Whether that's a zone, I think, as I've said, I think if you were to ask me today where we would go first from a development standpoint, we'd probably go in and around the area where we've got the existing head frame, right? Because that on the western portion, you've got thinner overburden, you've got the potential for a pretty interesting looking open pit. And you can also do things like, keep your tonnage small, go for the higher grade, ease of permitting, look at, doing sequential pits where you're not creating a giant, a giant hole in the ground. You're creating a pit and then going to your next pit and using the waste from that pit to backfill the other pits. That's conceptually, but that's what I have in mind. But something like 531, if you think about the thickness of overburden there is roughly 70 to 80 meters. And by the way, for what it said, overburden is not a deal killer, right? Especially at $5,000 gold. I think it's certainly, it's one of the advantages that we have at Douay that if this was the deposit that we have, if you scraped off all of the till and you just had that, 1 gram average, but some higher grade sitting at or near the top of bedrock, this would probably already be a mine.
Mm.
Right. So, I mean, a lot of these projects in the Abitibi, this is Canadian shield, glaciated terrain, and you're always going to have to manage overburden. I mean, they've done it successfully. BHP did it at Selby. They're going to have to do it at Casa Berardi, other places. And so, Is it possible to manage 70 meters of overburden in an open pit scenario at a 531? Possibly. It depends on characterizing is that till? Is it clay? Right? And thinking about what it would be like, do you dig a trench around it, dewater it, and then, mechanically strip it? Like what's that going to ultimately look like? But if I look at it just on the basis of where we are today, which is still early days,
Hmm.
I think it fits the model of bulk tonnage underground and relatively high grade at that.
Yeah. Yeah. Well, it's interesting when we talk about 531 because of grade, right? I mean, could it be high enough grade? Could it be higher grade? And could it act as a sweetener? Is what I was thinking about.
Oh yeah, and that is the thing is if you're trying to, let's just say you're looking for, you always have to balance with development. You always have to balance like your highest capex sort of item for open pits is going to be your pre-strip, right? Especially when you got this much material to move before you get into and even at the 531 zone, if you look at the shape of the pit, a lot of the core of that mineralization sits towards the bottom. So you have a relatively steep walled pit to try to get to that, and we're showing where the extensions can actually be. And then beyond the pit, you have this overburden on top. And so if you think about what the pit shape would actually look like, you know, reality is the angle of repose, right? The if you piled a bunch of sand in the ground and just looked at the angle that the pile formed, the angle of repose of that saturated overburden is probably 10 degrees, right? So these steep walled pits that you see at 531, when you get to that's in hard rock. When you get to the overburden, if you try to build it that way, it's probably going to go like this and then it's going to mushroom out this way, right? Which means a bigger footprint, which means more material to move. And, you know, mining, the art of open pit mining, why is Agnico able to make so much money off of Detour when the grade is zero point 0.8 grams? It's efficiency, it's economy of scale, and it's not having to move material multiple times, right? The less material you have to move, the more efficient the operation, right? So if we think about, okay, is there a way if we start looking at, pit scenarios and then we look at mining out a pit and look at doing a ramp to get to some of these higher grade portions of the 531, that may be a much more efficient way to tackle 531 than building a giant pit, right? In terms of grade profile, we're always looking at ways we can improve the overall grade, right? Because that's gonna ultimately produce better near-term cash flows that can pay back capital, and then everything else from that point, once your capital's paid back, is gravy. So we have our high grade portions that we can use, so we can circle right now. 531 is one, Joutel is another, right? So you can think about from a blending perspective, you can think about, 531 and Joutel. If we can figure out mine scenarios that actually work, you could think about an open pit on the western portion of the Douay deposit, and you can think about one or the other of Douay or 531 being a potential source of blending. Or it's just whether or not, like, the complexities of junior companies trying to do too many things simultaneously is where things go wrong. So while you may be excited and we may be excited about the idea of getting the grade incrementally up by opening up some higher grade portions of the deposit, the complexities of trying to build an open pit mine and an underground mine simultaneously or restart a brownfield may be prohibitive, right? And that's where, we're going down the pathway a little bit further than I would prefer to, just given that it's speculative. But, I think from an exploration perspective, when we're hitting grade at 531, whether it's open pit or underground, we're hitting the kinds of grades that would indicate that there is underground potential there. So I think it's worth continuing, right? If we hit things that we're starting to strike out there, there's a high bar at 531 because of the thickness of the overburden, right?
There you go again, calling it 531 and not 531. I
Oh,
thought we agreed.
531, yeah.
Uh,
You can keep calling me out on that one. Our nomenclature for the deposits is also something that was inherited, right? I mean, our goal is going to be
Great.
to make a new discovery so we can put our own name on it. You can come up with a few names. You throw a couple of names into the ring for that.
That's a good point. Actually, it's something we'll talk about when it comes time to talk about Sonic, maybe. But we'll
Yeah.
leave that as a bit of a cliffhanger, maybe, because I wanted to talk about oriented core as well. I see that you're going to be drilling oriented core, which is great. How much of the program is actually going to be oriented though?
All the core we're drilling is oriented. And it was done that way because we hadn't done oriented core in the past, and there is some structural. We see evidence of structural controls on a mineralization at Douay. So I should say all the drill core at Douay is oriented.
Yeah. What are you thinking in terms of structure? What's the working thesis?
As I said, I think it's this rotation, strike slip movement on the Casa Berardi. I mean, the Casa Berardi is an interesting. It's not like a fault that you can sort of put your hand on and say, okay, there's the fault, right? Because you'd be looking for that evidence of that in the drill logs, right? And in the core.
Yeah.
We don't see it. You look for gouge, right? You look for other things in the core that sort of would say, okay, bang, and we're hitting it in multiple areas and we can line it up. What the Casa Berardi is it looks like it's a big deformation zone, right? And if you go back and you look at the geology of this land package that we control, the Casa Berardi on the western portion of our land package, the Casa Berardi fault, which is a pretty continuous single zone, it splays, right? And there's this splay of a north Casa Berardi fault and a south Casa Berardi fault and this nice dilation shape, and we control everything in between. The Casa Berardi North deformation zone is what we call the Douay deformation zone, and that actually looks to straddle, the Douay deposit appears to straddle that.
Mhm.
Um, but we think that there is some different motion on that fault that we're trying to verify, trying to develop a deposit scale and a property scale strain map, right? Structural geology, I remember going back to my School of Mines days, it's fascinating, right? You have to think in three dimensions, and it's basically like putting a puzzle together. As if you remember when you were a kid, you take a jigsaw puzzle and you dump it out, and you're trying to put the puzzle together, but you always have a piece of what the ultimate completed picture looks like,
Yeah.
right? Structural geology is you dump all those puzzle pieces out on the table, throw away the box and the image of what it was originally looked like, and then try to put it all together,
Yeah.
right? And that's what we're doing. And so we have certain tools available to us. Geologically oriented core is one. Good structural geologists and people with structural backgrounds, they're not a dime a dozen, right? They're hard to find. People are already difficult to find in a more sort of buoyant exploration market that we're in today. But we have Ian has done an amazing job with our team on site in developing the structural model. And then when we say our goal as exploration geologists and as an exploration company is to go out and test the thesis, right? If our thesis on what's driving higher grade on these distal portions of the Douay deposit is largely structural, and then we come up with a nice diagram of why we think it's happening, and then we don't gather the data to kind of verify and vet is that thesis reasonable or not, doesn't help us for our next phase of drilling, right? Like the goal is not to just spend more money. And again, I look back on where this company was, we were always trying to get, more information, right? Gather more data, get more borehole geophysics, get as much information as you can from every hole. It's the hardest part is to incorporate all that data into something that's cohesive, right?
Yeah. Yeah.
And it takes a lot of time and effort, and especially as you go into bigger drill programs. I mean, one of the reasons why we don't want to drill 100,000 meters, just because we have the money and just drill that now and then raise more money, the following year. It's because it takes time. Like you want to not only make sure that the planning and the sequencing of the holes is appropriate, but every drill hole you get back is, if you think about your Monte Carlo, right, you're getting better information, right? So you should be able to take each of those holes and improve the quality of your targeting as you go forward. The only reason that you're able to do that is if you're actually processing the data.
Hmm.
So the oriented core is a valuable tool, and it was one that we talked about with we presented the structural model to our partners, and we sort of said, okay, this is what we plan to do, and I think it's always good to be able to bounce, for an aspirational company that's looking to do big boy exploration on a big prospective land package. It's nice to have a big brother that you can go to and say, hey, does this make sense to do it this way, or is there another way you would do it, right? So I think we're on the right track. If oriented core, it's expensive, right? And it's only as good as the drillers that are actually drilling oriented core too. So, we want to make sure we're always managing that program and getting appropriate data.
Yeah. Well, that's why I asked. Like, I understand the overall structural thesis, but I was thinking whether you're going to be chasing something new or something different, or whether you expect something to surprise you, which is kind of a funny thing to say because you never expect a surprise. That's why it's a surprise. But would you expect it to be different now that you're going to be doing oriented core after having done quite a lot of work? Like sometimes you see oriented core earlier on, and that's why I asked.
Yeah, listen, I think it's too early to say, right? Because we had the first pass drill program that we did with oriented core. The more data you have, the better understanding you have of the system. So we haven't seen anything, I'll say it this way, we haven't seen anything in our drilling that invalidates our model, right?
Mm-hmm. Yeah.
So can we say with certainty that this is the model that we're going to use, consistently to be able to target the high grade gold that we want to target, throughout the Douay property? No, we're not there yet, right?
Mm-hmm.
But
Yeah.
we haven't seen anything that would say, well, oriented core is not an effective tool that's going to get us there, and that we have to take the model, rip it up, and start with a new thesis. We haven't
Yeah.
seen that.
Well, I'm glad to see it. I think not enough companies do oriented core, so I'm happy. I'm glad to see it. What about Joutel? Are you thinking this is going to be a satellite to do away, or do you want to do a standalone resource on it eventually? What are you thinking?
Well, I can answer that question first. On the next resource update, Douay, there will be a maiden resource on Joutel, right?
Mhm.
So it is the combined project is the Douay Joutel project by virtue of the fact that Maple controls, 481 contiguous square kilometers. Now, it's our flagship, right? But I think Joutel, the starting point for that, it's taking existing historical data that Agnico had from when they were operating the project back in the 70s, 80s, and 90s, and looking at using, appropriate methodologies, what, was left behind, right? Where are the locations of the existing stopes? What other data do we have there that can kind of show us what other zones, what other types of tonnage and grade do we have adjacent to the existing stopes? So that maiden resource is going to be on the basis of, historical data, right? The where it can get to, that's what we're drilling to test right now. And I think when you look at the drill plan, when we start to deliver results, it's pretty clear that we're not trying to just go after low-hanging fruit just in known areas that they drilled already, because some of that may be sterilized, right? We don't know. And remember, when you're mining underground in the 70s, 80s, and 90s, right? Even the quality of the data. Remember, most of this data it was analog, right? People were actually, there wasn't any GPS. There wasn't any, lots of electronic sort of the kind of quality of the data and the horsepower that we have and the tools that we have today. They weren't available back then. So people were developing, and I think these guys were amazing. I think the history of mining is what makes this business so fascinating. Is you had guys mining here and everything was done on paper, right? We have a treasure trove of data. I still invite, the open invitation is there to come to site and take a look at just what we have here, because you can pull out these old, level plans and um, cross sections and long sections that were done with rapidograph pens and, on light tables, and do your overlays and all that stuff. So what we're trying to drill at Joutel is far enough step outs to show that there's potential to extend and expand along, again, similar to what we're doing at Douay. There are some, what we believe are controls on the higher grade mineralization. At Joutel, it's a little different. I should say that this is not Douay, because Douay is it's broadly related to an intrusive complex,
Mhm.
where we see Joutel as more of a syn volcanic, sort of exhalative, more of a VMS style of deposit, right? So think, seabed floor, black smoker, mineralizing fluids, and settling and more stratigraphically controlled. Then it's it's tilted, it's faulted. Like the stratigraphy is largely subvertical. And what they mined at the Joutel mine complex was if we're looking, you can look at it in plain view, but if you turn it this way and you look down the axis of the Joutel mine trend, it was about 3 to 30 meters width, and it kind of went like this, right? And so when you're drilling it, from both directions and trying to test, is there potential to extend it along the trend? Is there potential to expand it to depth? is there potential to, extend some of these higher grade trends along areas where they could be accessible if you were to go in and dewater the existing shafts and open up some of the workings? Are there some areas that they didn't drill test before because of lack of capital or because of lack of, they moved on to a different, project? Are there areas that you can potentially open up and access using some of those underground workings that, that make Joutel very compelling from a development perspective? It's too early to say. But I like the chances of going, as they say, that the best place to find gold, is in the shadow of a head frame. The funny thing is, when you look at Maple, the head frame, there's no head frame at Joutel, even though it was an operating underground mine. That was all reclaimed, and the head frame that we have is currently at Douay, which is never mined. But I think the likelihood of actually seeing something reasonable at Joutel, where they mined it profitably at sub 300 using a 6 gram cutoff and a head grade of 6.5 grams. I mean, even if they left all of the sub 6 gram material behind in today's gold price environment, that becomes very compelling.
Yeah. Yeah. You're targeting a resource for this year. Why though? I mean, I think initially, maybe at the beginning of 2025, you were targeting a resource for the latter part of last year. You decided not to go through with that. I know it's been communicated as well by now, but why not? Why not wait and implement the 30 and then potentially the 20 on top of that? Why rush a resource?
I don't think it's rush. I mean, we started that resource exercise last year. I think it takes time. Like we got, especially with Joutel. I think Douay is largely complete. I think we're waiting on the Joutel, finalizing the Joutel side, which takes time. You have to go back and go through all of these historical logs and make sure. Like we strive for. I think being right is more important than being timely, right? Because I think right now, just given the fact that we're not trying to put news releases out to move a market so we can go raise capital, right? We're trying to put something meaningful out in terms of a resource update. I think there is a psychological sort of threshold. If we say that the universe of 3 million ounce gold projects in Canada with infrastructure is already, pretty small. If you grow that from 3 to 4 to 5 million ounces, I think that's you're already getting into rarer territory. I think there is something important about the maiden resource on Joutel. I should have said all this discussion we had on Joutel. If you take that valuation exercise earlier in our discussion, remember that's only on ounces that we currently have at Douay, right? That assumes zero value for Joutel and zero value for any blue sky exploration potential across the broader land package. So I think getting a maiden resource out on Joutel is important to get the market sort of recognizing that there is a restart opportunity there and a high grade restart opportunity of that. I think the work that, remember, we revamped this team, and the team has done an amazing job of remodeling the entire Douay deposit. I think there's some efficiencies. There's some smart things that they've done with kind of going and challenging assumptions on the previous resource and then going out and further drill testing. All of the drilling that we had done through the last 2025 winter spring program, all of that drilling is going to be incorporated into the resource. And so what we're going to have when we come out with this updated MRE is you're going to be able to see, it's a snapshot in time, as all resources are, but you're going to be able to see a snapshot of where this resource, think of it as a reset. The company's been reset. Think of it as a reset resource, right? In today's price environment, with the understanding we have as of today of both of these deposits, with the better geologic modeling that we've done, this is what that resource looks like. All of this 30,000 meters that we're currently underway on, and the aspirational sort of 100,000 meters we have planned over the next 2 years, that will be additive to that reset resource, right? So I think it's more important to get that resource out now. It's not about rushing that resource. That resource has been underway for quite some time. Trust me, I'm working very closely with Ian and the team, looking at the various assumptions that are going into it, making sure that it's not just a number. If it were as easy as putting out a resource with a number and saying, okay, this is the reset, we just adjusted the cutoff grades and used a higher gold price assumption and just said, okay, this is the number and throw it out there, that's a bit careless, right? I think what we have strived to do, what I've always described, what we're trying to do with this resource is have it be more, when you're looking at that resource coming out, you're going to be able to say, okay, I can see I can see the concept, right? Or if you come to me and you say, Kieran, what do you think your strip ratio is going to be in your open pit? Right? Like there will be actual answers to those questions, right? And because we need to answer those questions for ourselves to decide what is the path of value creation for the company? Is it continued exploration or is it a development scenario on the ounces that we've established?
Mhm.
So I hope that that gets you to kind of the why, but I think there is some value. The flip side of not putting out a resource and just waiting is you let the market sort of gauge the impact of each drill hole and what it should mean in terms of translating into share price and valuation of the company. I think that's risky, right? Because I don't think this project should trade on the back of one drill hole here or there. You've got 3 million ounces. It's probably north of that with the updated resource. Individual drill holes, how material are individual drill holes, right? Should the stock trade up or down? I mean, some of that is just the behavioral economics of how the junior market works, is people look at a drill hole press release, and if the stock trades up, they decide it's good news. If it trades down, it's bad. As Maple had done in the past, we had a deep drill hole press release that the VPX was also stepping away from the company while those results came out. It's pretty easy to infer that those results weren't what the company was looking for.
Mm.
So look, I think what we're trying to do with our updated resources is to put something that's very credible. Think about who our partner is, think about the new investors that have come on board. We want to be able to show the market these are the ounces that we have, but we think we've got a path on those. And then everything we're doing from an exploration standpoint is going to be additive to that.
How big do you think it could get?
On the next resource update or
Yeah.
just generally?
Well, both.
Not really my place to speculate on, how big it can get. I mean, that's the old, it's the $1 million, $1 billion question of, what is the ultimate size of the project? That's what we need to go and do systematic exploration to determine. On the resource update, I mean, look, we've shown a slide in our presentation deck that just shows if you don't assume any changes to the modeling or anything else and you just use cutoff grade, look at some of the peers that are out there. I mean, you see some of our peers using 0.3, 0.35 cutoffs, 27, $2,600 gold price assumptions on updated resources and PEAs. We show what the pit shapes look like on a 0.3 cutoff. And that's a more mineable pit because you're not using these disparate, small pits. You're probably adding ounces there. So like I can't get to like what I think that number is going to be, but I had originally go back to some of the interviews that we did when I first came on board. The
Yeah.
goal was to show a path to get from 3 to 5 million ounces.
Right.
And there are two ways that we could do that. One is go and make new discoveries and do good drilling that's going to add ounces. The other one is to utilize the fact that the gold price is moving in the right direction, right? We don't want to use something that is. We always want to stay middle of the road, and we always want to put out something that has credibility because at the end of the day, the goal isn't to mine the market, right? The goal is to mine a deposit
Mhm.
ultimately. And so if you start lowering cutoff grades to the point where you bring in a bunch of marginal ounces, if you think about even Agnico and how they've been able to outperform the markets, they've focused on high margin ounces, right? High quality ounces. So maybe some people looking at lower cutoff grades and lower average deposit grades would say, "Oh, look at all the ounces these guys have." But we have a couple of precedents and peers that are trading at relatively low valuations. They have lots of ounces, but it's very difficult to see how many of those ounces are actually real, right?
Mhm.
So
Yeah.
um,
Cutoff grade, is that something you're thinking about already?
cutoff grade is something we're always thinking about, right? I would expect there is scope here going from uh, $1,800 gold price in 2022 to the current $5,000 gold price, and higher than that in Canadian dollar terms. I think there's certainly some scope to look at slightly lower cutoff grades that would improve not only increase the number of ounces, but improve the mineability of a deposit and show how the grade distribution and the blocks how they are oriented so that you could actually see a potential mine plan coming together. I would be hesitant about going down as low as zero point 0.3, right? Because zero point 0.3 is something that we show on the chart as illustrative because there are peers that are using that type of cutoff in the Abitibi. It's more of an illustration of showing what the impact is of gold price on that's the ultimate question on optionality, right? Is the ounces in the ground, they have value, but their value changes based on where the gold price actually goes, right? And so, in theory, if you can come up with a model that can figure out how to track fundamental value and translate it into share price based on what's happening, not only with the complexities of geology and individual projects, but also what impact gold price has on junior company valuations, like I'll sign up, right? Because there is a lot of disconnect, and that's where I think the opportunity really is for investors is doing their homework and figuring out which are the credible teams, which ones are getting the right kinds of partners, which ones have, are keeping their costs in line and are being disciplined. Those are the ones that are probably going to outperform in the long run.
If I can have only 10% of your cash position, I'll try to come up with that valuation model there. Only for 10%. I'm not asking for that much. Jokes aside, talk to me a little bit more. And I understand we've been at it for a while. So if you get tired of me, just close your laptop, pretend the Wi-Fi got cut off. But what's controlling your decision making here with the resource? Is it maximizing size or grade or early payback? Because I understand, like the overarching topic is, hey, do we have a mine here? But what is kind of that when you zoom in? What is it? What's guiding your decision making?
Look, I think that this is a big system, and I think the pit constraint originally was something that got larger cap producing companies to start, in 2019 when the previous team had put together a pit constrained resource, it attracted a partner of the caliber of Agnico, right, to start taking a look at it and say, is this a potential open pit project? What's the drilling pattern? How much of the upside exploration has really been determined? The answer to the last question, I think, is the most important, is that it's very, very sparsely drilled across, not even within the deposit, but across the broader land package. So how we think about the resource is the number is important, but not sacrificing grade and quality of ounces, is equally important, right? So if you see us, just go from a 0.45, like I remember, we're trying to lay out a case that we're undervalued relative to our peers. There are a couple that you can look at, I don't want to use names, but there are a couple companies that have triple the valuation of us that have projects in the Abitibi where they use a zero point 0.3 cutoff and have an average deposit grade of 0.7. And they're coming up with an early mining scenario, 5,000 tons per day, and getting market attraction and interest for that kind of a pathway. The Douay deposit right now, the 2022 resource, probably certainly helped by virtue of the fact that we have a mining partner, and we had a JV partner at the time that looked at it from a more rigorous, like what is a real benchmark for evaluating projects of this scale and size, internally within a mining company. We used a 0.45 cutoff, right? And our average deposit grade is over a gram. Because at the time, the rule of thumb, of course, for the Abitibi was if you have an open pit deposit that's over a gram, it probably makes a pit. But that is not static, right? That changes when you have gold prices moving and other things. So, there is going to be, like, I'd like to be able to show, this is my ideal, is when we show, and the next time we get together post resource update, I can show you a waterfall chart that says, here was the 2022 resource, here's the 2026 resource. And then this was the ounces added based on gold price. This was ounces added based on drilling. This was ounces added based on better modeling or using different kriging methods or all these other things. So, and if you see, for example, that we went from this many ounces in 2022 to this many ounces in 2026, and all of that buildup was based on lowering cutoff grade and gold price, then, that's not really the purpose of doing an updated resource, right? It's supposed to be built off of better understanding of a deposit and additional drilling. So I think the most important thing for us is to show that there is a nucleus of, kind of call it, greater than, zero point 0.9, somewhere around zero point 0.9 to a gram is around the sort of open pit grades that I think make for high margin projects in the Abitibi. If we can demonstrate that the ounces have grown substantially without going below that, I think that's really important.
Mm-hmm. Do you think this is going to be the last resource update before a PEA, or do you want to do another updated resource and then a PEA? How do you see that?
That's TBD. I think the likelihood though is that PEA, if this grows in a reasonable way from 2022, I mean, again, we have a pretty good critical mass, and if the work that's happening behind the scenes on the engineering and scoping points in the direction that we can put out a PEA, and we're going to need to obviously do a fair bit more drilling before we issue another resource update. I think we probably go to PEA, right?
Yeah. Yeah.
But I think what we want to do is if we're going to be doing bigger company style exploration programs, 50,000 meters a year, I would expect resource updates to be more consistent, more frequent. Not every 6 months, certainly that would be foolish. But I think if you've got meaningful drill results and you're doing a lot of meters, I think you look at these resource updates as they're snapshots in time, right? And so, you know, after we deliver something, perhaps if we deliver a PEA end of this year, if we can say, okay, this is kind of what we see, but we're going to continue to grow the ounces and we're going to target these areas for additional resource growth, and we put additional 50 or 75 or 100,000 meters in those areas, I think it would make perfect sense for us to come out with a resource update. The time delay between the 2019 and 2022, we drilled roughly 20 to 25,000 meters. Between 2022 and this 2026, we drilled roughly the same, although albeit some of those are outside of the resource area. The deep drill holes, I wouldn't really say were impactful in terms of this up forthcoming resource. But I think 4 years between resource updates is not what I would expect given the quantum of meters that we expect to drill.
Hmm. You're going to be doing some met work, I think, as well in the process.
Yeah, look, I think we have enough now for PEA level, study. But if we want to have, as we said, we want to come out with something that's credible, I think we just want to make sure that we're vetting and verifying. And as I said, I've said this previously in our interview that, we question assumptions, right? So the Met program that Maple had done was done on as an early stage company looking at, representative samples from all over the deposit. It was done in 2017, 2018. If we're going to actually show a path, and we've had Ausenco obviously review that Met data, we have confidence that, some of the things that I'm saying in terms of, it being, these low 80s to low 90s recoveries, the type of flow sheets that we'd be looking at, the lack of deleterious elements like arsenic. I mean, we have confidence in that, but I think just making sure we've got more representative metallurgy as we go. Again, one of the triggers for even the back end that we did with Nika was if we have a pre-feasibility study, we have reserves, and we've got an NPV at 5% of over 300 million. Agnico will have to make a decision. If we decide we want to go on that mine plan, Agnico will have to make a decision as to do they want to be a partner with us on a 50/50 basis and pay 12 million plus 2 times all of our cumulative exploration expenditure. Or if not, we're 100% owner, and we're driving forward with a development scenario. So metallurgy is just a part of that, but it is an important one.
Right. Are you going to have it in separate news releases? Do you think you're going to have it in one main news release, or what's the expectation on communicating the metallurgy? Because it's kind of that boring news release that you don't want to have out there, but it's important still. Boring from the perspective of a lot of people don't pay attention to it, but important nonetheless. So yeah, how are you going to talk about met work over the year?
I think I put met work into the category of project de-risking, right? And I think the principal use of proceeds of the financings that we've just completed are to grow the ounces, right? And grow them materially and grow them in, ways where we're not just adding ounces, but we're adding, high margin ounces and potentially economic ounces. When we do some of these other things, and we'll talk about Sonic here in a bit, but Sonic's been pretty efficient for us. You can drill a lot of holes, in a relatively short period of time at reasonable cost and get quite a bit of information. One of the things that, in addition to metallurgy, we want to do is we want to categorize the overburden, right, on top of the Douay deposit, so that we know if we're thinking about engineering scenarios, are we dealing with, moving till, are we moving clay? The methodologies, engineering methodologies you're going to use to deal with that are going to be very different, depending on what you have. And we don't really have a lot of characterization, on those yet. So I think, the meaningful news flow, as you said, the metallurgy and the de-risking stuff, the miners of the world find that stuff, important, right? It's a
Yep.
gating item to say, is this a buildable project? The market, and, over 55% of our stock is still held via retail. They're looking for drilling news. And I think our long-term partners are also looking at this, the bullishness that we have across the sector right now. The reasons why some of these larger institutions are starting to look down market is, I mean, let's be honest, a lot of the producers that are producing gold in this environment have received re-ratings, right? That they're approaching, very fair values for the cash flow that they're generating and forward earnings, and balance sheets that have been, cleaned up and are relatively pristine. So the next wave, I think that, as we've seen in cyclical industries like this, is they're going to have to go down market and acquire, right? And it's going to be cheaper for them to acquire. And so, the best way that we can make ourselves, stand out from the peer group and claw back valuation, and, make sure that we trade, more on the left side of the chart on the EV per ounce chart than, at the bottom right, is to make sure that we're showing not only that we've got, quality ounces that have a real path forward, but also showing that there's substantial upside,
Hmm.
to those ounces, right? And so I think the combined, as I said, the dual track philosophy of the company remains on, focused exploration. That's going to get the majority of the budget. The majority of the 36 million we have on the balance sheet is going to go there. And then the project de-risking, that's going to be disciplined, right? Because, what you don't want to do is, typically the market, they see a PEA, the next thing is going to be, okay, well, give us a PFS, right? Go do 100,000 meters. Instead of doing 100,000 meters of expansionary drilling, go do 100,000-meter infill drill programs.
Hmm.
But what that does is that assumes that this thing can't grow any further. And, we don't want to end up in a development scenario preemptively without knowing how big this deposit can be. Because, to be honest, the most efficient, capital efficient way of building a project is a company, like a large company that doesn't have balance sheet constraints. If they know how big, and we know how big it's going to be, or how big it can be, or where the expansion potential is, then you can right size a mill, you can, permit tailings appropriately, you can do all that stuff, right? Um, and bigger projects, let's be honest, bigger projects, I tip of the cap to, companies like Troilus and others that are going it alone, right? That are taking big projects and trying to shepherd them through, federal, permitting and all that. I mean, to be honest, Canada still has a ways to go, in terms of, its support for the mineral industry, right? And making sure that the permitting timelines are appropriate, relative to the capital that wants to invest in Canadian projects. But,
Hmm.
look, that's a whole nother ball of wax, right? I think we
Yep.
look at this from a junior standpoint. Our team is set up to do really good exploration work, and to do good de-risking, initial development studies and other things that can, really get more eyes on the project, which we firmly believe is one of the best in Canada, if not the world. So we just have to go out and prove that.
And that's why I'm asking these questions, where it's like maybe some of the boring stuff like oriented core or met work, and all the other things they're doing. They are important for companies that want to do decent work on decent deposits that might amount to something eventually, instead of just explore, and spend the money, spend the money, spend the money. So that's where I'm coming from, and I'm glad that you're taking the time to explain it in that much detail.
Well, look, it's a data. The company is data driven, right? And that's the key thing for us, is it's not just gathering the data, it's utilizing the data, right? So, our quality of the work that we do, if the team comes to me with a thesis of what they want to do, and they can back it up and support it, what it's going to give us, we have a very strong technical committee, that has to approve not only, the work that we want to do, but also make sure it fits within a budget. And so I think all things being equal, there's a bias here to doing good exploration work that's grounded in fundamental geology and best practices.
Hmm.
So.
Yeah, yeah, exactly. A couple of more things just before I let you go here, Kieran. Sonic,
Mhm.
you had some news. It was not a separate news release, which was interesting to me as well. Why not? First of all, and second of all, what do you think is gonna happen there? What are your plans for Sonic?
Look, Sonic is a tool. It's something we deployed last year to start advancing some of the regional targets that we have. I mean, it's a very effective tool when you've got unconsolidated sediments covering, bedrock. You're looking to do a number of things with the Sonic rig. It's actually the way the contract works is it's a fixed cost per day, as opposed to a per meter sort of charge. And so you can drill as many holes as you can get. If you want to drill in a grid, if you think you've got a viable target, you want to start getting top of bedrock samples, you want to start doing some gold grade analysis and other things. It's a very effective. We certainly in the early days here we found it very effective, and it's helped us to identify importantly a couple of regional targets, right, that we're excited to get after here in the next with this additional budget that we have now to go out and do some further regional testing. Why wasn't it in a separate standalone press release? I mean, look, these are, the materiality of, some initial Sonic results. Like, as we said, we're not arm waving here, right? We're putting a comprehensive update on what the current status of each of our projects is. So, we completed that Sonic program. Took a little bit longer to get some of that data back. I mean, if you think about what they're gathering, they're getting buckets of material that have to be sent to labs and processed and all that stuff. So there's a lot of material to move around, but yeah, the team's done a good job, and I think we have enough confidence in the utility of the Sonic rig and the program to deploy it again. Not only to keep advancing some of these regional targets, but also to give us some characterization work at Douay. So excited about using it as a very effective, cost-effective tool as we go forward.
A summary of the catalyst for the rest of the year is what I wrote down. I think it's how often do you think you're going to have news releases actually? Are you targeting something like once a month or more often? What are you thinking?
Look, I think the market certainly has been waiting on some drill results. We're going to put, probably makes sense to put Joutel and Douay, just not to distract and do a big data dump and just say we've done that. Last year, we had obviously we were focused on the Douay program. We put out two releases that talked to obviously the major discovery and a bunch of other holes that we hit on at Nika, and then we followed up with some of the hits that we had at 531 and the rest of the program. So look, I think you can expect some sort of press releases coming on the status of the current drilling. Once we start getting those out, I think as I said, there will be a steady stream of that going through the summer. Resource update is a very material news event that's going to be coming very shortly, and we've guided towards delivering that before the in the first half of this year. The hope is we can deliver it sooner. So stay tuned on that. And then announcements with regard to how we're going to deploy the rest of this additional treasury that we have to really start advancing, bigger exploration programs, right? I think if you see the history of the company, it took us a while to reset the geology. We didn't drill a single hole, just sort of setting it up right. We did a 12,000 meter program last year that was just starting to, get after and understand better what are the controls of mineralization. So 30,000 meters, potentially growing, what the vision and the strategy is going to be going into 2027, fully funded. Those are the types of catalysts that I think you can expect over the next a couple of weeks and months.
Hmm. You mentioned something about staff. Is your G&A going to go up, or what are you targeting for G&A this year?
Look, I think we're probably between 2 and 3 million in cash G&A, as we discussed. That's very important for us. It's a sort of a first principle that while we're doing more work and spending more money on the ground, that we don't want to be dramatically increasing our overhead cost, especially since we're dependent on external capital to support the company. We did all the hard work of really right sizing the G&A for a company of our size, during the downturn, and we're going to stay disciplined in that. I mean, the company's G&A will inevitably go up slightly as we've added some people in key areas, but we've added the right people, right? We've added people that understand that certainly you got to pay people for their time and their effort, but the upside is really why people are here, right? And there's fundamental alignment with the shareholders on that.
Yeah. Good. I think we've been through a lot. Again, I appreciate the detail that you've given me here and the time you've given me, really. So I'll work toward wrapping it up. What am I forgetting to ask you here? What else did you come here hoping to talk about that I failed to bring up?
Well, no, I appreciate your time. I mean, we've got into quite a bit, and I think the more important thing is going to be when we start to get those news results out. We start to deliver the resource update. Let's go back and revisit some of the things we talked about here today.
Yep.
I look forward to seeing you either at PDAC or over in Europe or wherever we cross paths. I don't know if you're going to be in Quebec for the mining event. We actually have a core shack there in June. So
Hmm.
if you're planning on coming across this way, maybe it'd be a great time for you to take a look at the project, put some boots in the ground. We can get you working, and then you can have naming rights on our next discovery.
I thought I already had my hat in the ring there. But no, that's good. That's a good point. I've not been to the Quebec conference yet, so I might consider that. Yeah, no, good points, Kieran. That's it. What's been the most fair criticism of Maple Gold since we last spoke?
Uh, I can't think of, I think the only thing that maybe people are just saying is we want to see more technical news, and it's coming, right? So, we've done a good job. A junior company is typically reliant on technical news to drive share price appreciation. And if you look at sort of the history of what we've done corporately in terms of execution, I mean, all the groundwork has been laid to deliver meaningful technical results, but we've clawed back all that value lost just by virtue of good corporate work, good deal making, good business strategy, et cetera. So, I think the job for the company now is to make sure that we can deliver technical results that that continue to build trust that we've regained in the market, right?
Hmm. Well, when your stock price doubles, there's not a lot of criticism in the first place. So that's a good point. That's it. I'm going to let you go. I know you have a life and a job to get to. So thank you so much for doing this, Kieran. I appreciate it, and hopefully speak to you again soon.
Sounds good. Thanks again. Good to see you.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should, under no circumstances, be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Oh, so unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."